the end goal of central banking is they will monetize everything, right? They will print money to buy everything. They'll print money to buy stocks. They'll print money to buy bonds. They'll print money to buy options. They'll print money to buy gold. They'll print money to buy food. They'll print money to buy, tanks. Everything will be monetized eventually. But this is the fiat disease, right? It's progressive. It doesn't start with everything. It starts with just government bonds, and then it moves to, let's say corporate bonds, and then it moves to equities, and then it moves to microcap equities, and then it moves to derivatives, and it will domino effect all the way down to the real economy eventually, which is when you see a very high inflation event, and that's when Bitcoin will really come in handy. But yeah, so Japan, then experimented with these negative interest rates from 1999. They went to zero, and then they started doing negative rates in March 2016. And launched yield curve control in September of that year. And yield curve control just means essentially QE infinity. They will print as much money as needed to bring the interest rates down to zero. And so what this created is what you would call a carry trade, right? Traders could go and borrow yen at 0% or even negative rates. And then they could go and lend in US dollars or lend in euros or lend in pounds at 2%. And so it basically generated free money because you can borrow for nothing and you lend at something. And as long as you just hedge the currency risk, it's essentially free money. And so all these carry traders started to pile on in Japan, and Japan's all this excess liquidity that was stored up in Japan that the industrial base wasn't using and the consumers weren't using. 54% of household assets in Japan are held in cash. So all this cash, trillions, literally $10 trillion, was started to flow out into the global stock and bond markets. And again, all this carry trade started to boost up U.S. equities, U.S. bonds especially, and flow into basically every single major asset class in the world. And ever since then, the yen has started to weaken, right? And this accelerated to a great degree in 2022, because what happened in March of that year is we started the Fed's hiking cycle, which brought interest rates from the zero bound in the United States and obviously Europe up to 5 to 5.25% at the height of our hiking cycle. And I think Eurozone got to 4.5, 4.75%, pretty high too. And all this capital started flowing into U.S. stocks, U.S. bonds, because suddenly, again, people could borrow at zero in Japan and buy U.S. stocks. But the problem is this starts to hurt the currency, because functionally how you do a carry trade is you borrow yen and you sell the yen to get dollars, right? So what you're doing to the exchange rate is you're taking out $1 billion loan. You sell the yen, in yen, you sell the yen on the currency market, and then you convert it into US dollars, and then you buy something in US dollars. So it weakens the currency. And all this selling pressure started to push USD JPY from 110 in 2022 to 153 as we speak today. So,
so this is basically, sorry to translate from a non-financial background, you borrow money for free in one currency. You convert it into USD, and you buy stocks with it that are also growing because of the debasement of the USD.
Exactly. But your funding cost is zero. So for other people buying US stocks, maybe you have to pay 4%, 5%. Your cost is nothing. So it's literally free money. And so that's why the yen blew out 40% in just a few years, and why inflation has also returned to Japan. But this has obviously caused the Bank of Japan to panic, because Japan is a net food and energy importer. Japan, about, I think 80% of their meat products, around 30% of their rice. They have very high tariffs on rice to protect the rice industry because they're worried about it. 90% of their energy imported. So if you let the exchange rate blow out, then the price of all your energy and your food goes up, which obviously causes very high inflation. And so they were worried. So they started doing
they need to print also.
Yes, because they need to print anyways. and they need to print because they're at 260% debt to GDP. They're far beyond the monetary event horizon, right? They're far into the black hole. And at this point, I think there's honestly no saving their central bank and their treasury, because you can't get out of 260% debt to GDP. It's impossible. 120% is already past the red line. So they're double past that. But they started doing these interventions in September of 2022, these interventions in the currency market, because they were worried about the currency blowing out. And every month they were spending between $30 to $60 billion USD in interventions. And then they started moving the interest rates higher. They started changing the bands of yield curve control starting in December 2022, but accelerating in 2023 and 2024. And then finally in August of 2024, they gave up altogether on yield curve control, and they let the bonds start to blow out. And so that piece that you referenced, Flipping the Yen, was talking about my observation that Japan had decided, okay, we've let the currency blow out hard enough. Let's now let the bonds take the pressure. But of course, the monetary policymakers didn't realize the height of their own arrogance and folly, in that the bonds blew out much more than they expected. The 30 years at 3.3% and the 40 years at like 3.4%. And so at those rates, right, if you refinanced all of the government debt, they'd be paying, 10% of their GDP every year in interest expense alone. Yeah. So it's been massive.